Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 7th, 2012. Lots to talk about, so let's get started. I'm gonna make this short and sweet. If you look at the previous video, it explains most of it. I'm gonna delete this line here because it's no longer relevant. Actually, I'll leave it in for now. Alright, just a quick recap. We did discuss in the previous videos that we may get a reversal of this candle because it is a single candle pattern reversal pattern, and it happened on higher volume. And when you have that, what you want to see is a decrease in volume but in the same direction. I know you guys always hear me talk about volume, and to me, volume is very, very important, and it justifies the actual price. And you can also determine when price may change, not necessarily based on the actual candle pattern, but just based on volume alone. Okay, so in any case, we had that volume, right? And this is almost picture perfect. We had big volume here, doji candle, and then we continued higher on lower volume, right? So on this day here, this huge move over here happened on low volume, which also tells me that this move here is not validated. Okay, so what do I mean by volume? Why is volume so important? I mean, when you go to eBay, and again, I'm just going to repeat myself like a broken record in case you're a new user or or someone who is watching this video and haven't watched my previous videos. If you're on eBay and you want to buy this like fancy watch, and you only see like one or two guys selling this fancy watch for say $100, you really don't know if that watch is actually worth $100. I mean, you're probably gonna have to search on Google or look at other stores or whatever, but the more you look for additional things to support the price of $100, that's volume. Meaning, if you go to Google and you go to Amazon and you see Amazon selling it for $99, and you see somewhere else selling it for $104, and you can pretty much guess that $100 is going to be the average price. But that's not really the kind of volume I'm talking about. When you go to eBay and you see only two people selling the same watch for $100, you really can't validate that price. But when you see when you see 100 people selling the same exact watch for say $100 or $99, between $99, $100, $104, $101, whatever the case may be, then $100 is a lot more accurate. It's a lot more valid that going rate for that specific watch, whether or not it's worth the price. Again, we're not basing our trades on how good the company is, right? Simply because we are chartists. I mean, we look at technical indicators to tell us where the general direction of the general trading population is thinking of going, and that's how we make our money, or that's how I make my money. And that's how, like I always say in the beginning of this video, we do technical analysis to predict direction based on human emotion. And basically, when you buy or sell, that's emotions, right? Or when you hold, that's also an emotion. To make a long story short, when you have 100 people selling the watch at $100, and you can pretty much determine that is a valid price of the going rate of the watch, even though the watch may be say $50. It doesn't really matter, the watch being the company, right? So volume, that's why volume is so important. Okay, so anyways, we have lower volume, lower than the doji candle that was created. We have lower volume, and we continue to have low volume, even lower volume the next day. Possibly yesterday's volume could have been probably the lowest of the year. I'm really not sure. This volume here was at about 86 million. I mean, it was just really, really low. And then today's volume is also low at 109 million. And when we have an average of 150 million, this is considered low volume. Low volume again means that the price, it's how you can determine if it's a head fake or if it's institutional game playing, if it's that kind of thing where the price isn't valid, meaning it's not necessarily true and it may turn over at any time, right? And that's what we're looking at. Again, what we'll need to see, and this is picture perfect, when you have this huge volume spike here and then you have volume tapering off, all I need to see now, okay, is another spike in volume that trumps the previous 3 days. Okay, that'd be picture perfect for me. It doesn't have to be that way, but that would be picture perfect to me. This is here a shooting star. Okay, well, Let me back up a little bit here. You guys all know that I'm all scatterbrained every time because I love talking about charts so much. But okay, so that took I just explained the volume part. Now let's talk about this upper trend line here because now it's also been negated. I have mentioned in the previous video that this would be minor resistance. We did get an intraday pullback on this day here off of this upper trend line, and then we just broke right through it because of course it's minor resistance. So I'm going to delete this line here so we never have to look at it again. We may have to look at it later. It might be good support in the future, but as of now, I don't see it being that way. Okay. Now we also have this mathematical calculation here at 141.36 and 142.78. I doubt, like I said in the previous videos, I don't think we're gonna get here. And if we do get here, then this pattern, in my opinion, would be a failed pattern. And if the pattern fails, then the move is probably gonna be fairly large to the upside. Okay. But we do have this 141.36 now. Here's what I see as of today. This is a shooting star. So this is, as you know, well, this is not technically textbook a shooting star, but it is a shooting star. Some people could see it as a spinning top, or even some even more lenient people might call this a doji candle. In my opinion, it is a shooting star. It is a single candle pattern reversal indicator telling me that there's a possibility of a reversal. Okay, so this is one indicator. Okay, this is like I said, I need multiple indicators to tell me if the market's going to turn over or not, or a stock or ETF or whatnot. Okay, the second one here is where we tagged this upper trend line here. Okay, when I say tagged, I mean I can just bring again, trend lines are not an exact science. Okay, but this is pretty much as long as we don't cut through any bodies, and we haven't cut through any bodies here from this pivot here. We have this pivot here, we have this pivot here, and now we have another pivot here. There is a possibility, because we have those two factors, that we could turn and roll over. Okay, now in addition to this, if I get the top of this candle here, let me just delete all the other lines. All right, if I just get the top of this candle here and I just draw it straight across, what do we have? We have a double top here. Not really a double top. This would actually be a double top here, which would coincide with this 141.36 or the 141.88 level. But then that would literally be the double top, and then of course if you break through that, then we'll go to here. So basically what I'm saying is we have three factors telling us, or three indicators telling us, that there is a possibility that we could start pulling back as early as tomorrow. Now here's the caveat, or not really the caveat, but here's the thing that is on the negative side that would negate this as a reversal. Well, just to let you know, but before, well, okay, I'll save that for later. Anyways, this here is a shooting star, this here is a doji candle, and these are two indicators of a possible reversal, including this one here. This was also an indicator. I mean, you could have potentially said that this was a trend line over here, and then we tagged this trend line. The reason why I did not short the market at this candle here is simply because why? If you just draw a candle straight down, look at the volume. The volume was just at its all-time low. Again, low volume. Mondays and Fridays are notorious for being low volume, which means you have to give an upside bias because of low volume, and that gives institutions the power to prop the markets higher and do head fakes and what. Alright, so what's the difference? This candle, same thing. I mean, yeah, I had a little bit more volume than yesterday, but still low volume. You see that? It's still below the average. So that's telling me, and because I'm so into volume, I mean, it doesn't always need to be there, but if you're gonna look at candle reversal patterns without volume compared to candle reversal patterns with volume, whether it be a harami, or a engulfing, or a what do you call that, piercing pattern, or anything like that, I need to see volume on there. That's just me, that's just my opinion, that's how I trade, because the chances of it turning over with volume is better than the ones without. Okay, that's the bottom line for me. That's just my opinion. Again, you guys know I'm more of a cautious trader. With that said, being a cautious trader, I did get my feet wet today, meaning I did short the SPY by buying the SDS long. Okay, so I'm shorting the SPY, but by buying the SDS long, and the reason why I bought the SDS long is because it's a 2-time short the SPY. Okay, that's the only reason why I went the SDS long versus actually shorting the SPY outright. Okay, so with that said, we still have a possibility of hitting this 141.36 level simply because there is no volume here justifying. You see this volume here, just this volume here justify this doji candle as a reversal. I get no volume on today's move justifying a reversal. Okay, so there is a possibility that we may tag this 141.36 level. And the reason why I went short today or long the SDS, which is inverse to the SPY, is simply because I don't want to miss the train. Okay, we are in a pretty good resistance level. We could turn over as early as tomorrow, or we may not. But if we don't turn over as early as tomorrow, I don't see it passing this 141.36 level. Just I'm pretty sure that we'll probably get a bounce at least off this 141.36 level if we can even get there. If we can't even get there, then this sucker is coming right down. Okay, we may tag it tomorrow. We actually may tag this 141.36 level tomorrow and come straight down. I mean, who knows? This purple line isn't testing right now, so we may actually hit 141.88 before reversing back down. So the whole point I'm trying to make is I'm getting my feet wet. I went short by buying the SDS, and then if tomorrow we hit this 141.36 level and it looks like we have an intraday pullback, and okay, here's the key, and we get volume on tomorrow's trade, then yes, I'm definitely going to add to my shorts by buying more SDS for as far as what I'm going to do in the markets. Okay, so I'm pretty much out of time, but I just want to show you Priceline. Priceline had earnings after the market today. I believe it was aftermarket or pre-market. Yeah, it was aftermarket. Let's take a quick look at the 10-minute chart after hours and see what happened to Priceline. They did not meet expectations and they took a huge dump. Let's take a quick look. And there you have it. It was a 100-point drop, over a 100-point drop, about 16% drop after hours. All right, so this gray part here is after hours. We just came straight down, and now we're bearishly consolidating. We may have additional downside for Priceline tomorrow. This is back to the daily chart. Priceline, to be honest, I mean, I'm not sure, but if it even gets there, but I'd be tempted to take a long trade on Priceline, maybe at these levels over here. Actually, if we come straight down into this level here, then yeah, maybe I'd be willing to take this trade over here at this small little gap fill. But that's provided we come straight down, and it's not unheard of for a stock that moves 23 bucks on average per day. Okay, so anyways, this is your 7-minute market update. Thank you very much for stopping by and checking out this video. Just like I just want to warn you guys that just like a chess player, you have to be prepared for any type of move that the markets make. So just make sure that you have your stops in place. That's just again it's just an opinion of mine, and it's how I trade. And because I could be totally wrong, the markets may not turn over tomorrow, and that as indicated with no volume, to verify or validate that the price may change, we may continue higher. So I have my stops in place, and we'll just see what the market does. We do have good resistance. We are in good resistance right now. The only thing that bothers me right now is the volume. I mean, without that volume, again, without that volume, the market's not coming down, because institutions and the Feds can float the market higher as long as they want, and without fear in the markets, which is the strongest emotion out of the three. We won't see any large downside, or volatility would just not be there. Okay, so anyways, thank you very much for stopping by and checking out my videos. I really do appreciate it. If you guys didn't watch it, I probably wouldn't be making it, but thank you very much and for your support and whatnot, and I hope to see you in the next video.